Hi, everyone. Welcome back to another episode of Gee Whiz Weekends. I'm Emerald Fox.
I'm Lynette Zang.
For those of you who are new to our channel and our show, each week I'm going to be grabbing a social media post regarding the current economy and asking Lynette for her opinions, any questions that she can answer, as well as her invaluable insights. So to get kicked off for this week, I just want to say that last week, as we were talking about corporate defaults, you mentioned Japan and them stopping the negative rates.
Right.
So the post that I've grabbed today is actually regarding that.
Awesome.
Yeah,
That's
so,
good.
yeah.
Okay, let's go.
It's from Investopedia. It says how the Bank of Japan's interest rate hike could affect U.S. investors. The caption goes on to say that the BOJ, Bank of Japan, announced it was ending its use of yield curve control, a measure that ends the negative interest rates that central bankers used to try to boost the country's stagnant economy. Ending negative rates paves the way for the central bank to institute its first interest rate hike since 2007. Now, to get a better understanding of this, last week you were, basically the first time I've heard about negative rates before. I mean, it's essentially lenders paying interest to borrowers to hold debt.
Correct.
So, I mean, that just bewilders me. I mean, I've never heard of that before.
So let's talk about negative rates, right? Because they actually back in 1933 was the first and only time in the U.S. where we actually had negative rates. It didn't work then, and guess what? It didn't work now. So in 2009, we had the first negative rates, and it was tested in Europe. But here's why, and here's the thing about that, okay? Inflation robs you of your purchasing power. Since we're basically, officially we've got 3 cents left, but since we basically have inflated away all of the purchasing power of the currency, well, where do you go when there's no more purchasing power to inflate? You've got to attack principal. Okay?
Yes.
And the feeling was that would inspire you to spend money, that would inspire you to borrow more money, because it exactly is.
Right.
A negative rate is that you're lending somebody money and you're agreeing to take back less than what you lent them, right?
So them, being able to get that, that loan, then they would be basically flushing dollars into the economy. So they're hoping that
Right. They're hoping that because they want more, it's a debt-based system, right? So they want more borrowing, they want more spending. That's the whole point of dropping rates.
Yeah.
Well, they're willing. It was a test, okay? It was a test. And the IMF, the International Monetary Fund, which all of their members are central bank chiefs and treasury secretaries, they then came out after they did this study and said, negative rates are a choice. Well, sure, I'm going to work my butt off to make money, and I'm going to loan it to you and agree to take back less. Who would I really do that for other than my children?
Right.
That would be the only entity. You're going to do it for the government?
No, absolutely not.
Right. Not if you really understand what it is. Going into the CBDCs, right, the central bank digital currencies, one of the big statements is that once we have a CBDC, there are no limits to how low we can push negative rates. Therefore, if you're trying to save money and you're looking at your account, you're watching your principal evaporate and you didn't spend any money. If you're seeing your principal evaporate and you didn't spend any money, what are you likely to do? Take that money and put it into anything that you think is going to hold its value better.
Right.
Which is exactly what happens in hyperinflation. Except that would be hyperdeflation.
Okay.
And people ask me all the time, deflation, inflation. It's the same coin. And there's only one way to fight deflation, and that's with inflation. There's only one way to fight inflation, and that's with deflation. Now, going back to the Bank of Japan, because they've had this issue since the early 90s, right?
Okay.
So they have been creating this whole alphabet soup of all of these yield curve control where the bank says, and this is what yield curve control is, right? The bank vows to buy or liquidate enough bonds to manage the interest rate.
Okay.
Okay? The yield curve control are the different maturities of the bonds. So under normal environments, if you're going to loan somebody money for a longer period of time, you're going to demand a higher interest rate. Because we're at the end of this currency's life cycle, so everything is cattywampus, what we have and what we've had in this country for one of the longest durations is an inverted yield curve,
Right.
where you get more money for investing your money or loaning your money. I'm not going to call it investment. Loaning your money out for a shorter period of time than you do for a longer period of time, because people don't trust that length,
Right.
right? Entities don't trust that length. So they want their money to come due shorter.
Right away.
Now, in the US, we never went to negative rates. But in all of the machinations that the Bank of Japan did, even by buying their stock market and buying their bond market and keeping rates negative and all of that, well, that still hasn't pulled them out of the hole,
Yeah.
you know? So
Now
it
they have to
doesn't
do something
work.
else. Yeah.
Well,
Eliminate
it seems like what governments have a tendency to do, including the Bank of Japan, is doubling down on what is not working. Okay, so now they did raise interest rates to take it out of negative yield. Well, what does that do to all of that debt that then has to roll over? They're going to be locking in higher interest rates. They're going to be creating a lot more inflation. Okay. And central banks need inflation, because then you repay the debt that they've taken on with cheaper, in Japan's case, yen. Okay. But wherever you are in the world. So everybody's watching to see what happens. But the other countries that were in negative rates, particularly in the Eurozone, Switzerland, some of the northern countries that were executed, it didn't work. So they ended those negative rates after a really long time, because it doesn't work. And now the people in Japan, I had a viewer, I can pull this up because I was curious, because if you go in to look at the data on the economy in Japan, it looks like food prices aren't going up. The cost of living isn't going up because they've been in a deflationary period for so long. And personal experience, I haven't been and live in Japan, so personally I didn't know, but I did have somebody that lived in Japan. And so please, if you're living in Japan, can you help us understand what's really happening there? Because according to this one person, food prices were still going up. Wow. So even though they were in deflation, they were also experiencing inflation, which now will come a whole lot more rapidly, because all of that debt has to roll over into higher interest rates. That's happening all over the world. There's a huge debt mountain that's resetting.
Wow. So I have an additional question, and it goes more towards the U.S. side of things. So for the investors, the Japanese investors that are using, that lower rate to buy high yielding U.S. treasuries.
You're talking about the carry trade.
The carry trade, exactly. I had never heard that term before until today, and I was, digging into it. And how does that affect the U.S. treasuries if they're going to be bringing those investments home instead of spending with the U.S. treasuries?
That's a great question, because that's definitely going to have an impact, since we're issuing more and more and more treasuries. But we've also been experiencing where those strong hands, like the Bank of Japan and other global central bankers that had been buying treasuries, no longer buying as many treasuries. That's not something that's new. That's something that's actually been evolving. And what that does is it pushes interest rates up because there's less demand, right? So less of borrowing. The carry trade is always really interesting, and that is, just to let people know or clarify what that is, that's having the ability to borrow at this level and then converting it into a higher yielding asset. And the difference between those two is where they make the money, and that's the carry trade. So Japan's been part of a carry trade for a long time. Even the US and some of the things that we've been doing have been a carry trade. And if everybody's raising it at the same time, there's still different levels. Okay? So there will always be a carry trade as long as it's one currency versus another currency. And again, winners and losers have been selected by the central banks and by the governments. And you and I are not in that club. We're in the club of losers because we're not too big to fail, right? But we've even done it internally, you know, even recently by creating a program for the banks to borrow from at this rate, but then they could take that money that they borrowed at that lower rate and even buy treasuries at a higher rate. Right? Now, once that was discovered, then they had to cancel the program. Right? But, you know, I mean, it's good to be king, and you can get away with an awful lot because people don't even know how to pay attention. But Bank of Japan really has been at the forefront of all of this alphabet soup of QT, QE, double QEA, yield curve control. I mean, it's all manipulation. Why don't we see that and say no? Right? That's what you do when you buy gold. When you buy gold, you're going out of the system and you're saying no. You're voting with your wallet. Critically important.
Absolutely. Amazing. That was amazing information. And like the carry trade, I mean, that was so fascinating to me. And I, you know, just wanted to know a little bit more. And I'm sure our viewers love that information. And moving into more of our viewers, I've got, as promised, another question from one of our viewers today. Her name is Diana. She says, "Hi, Lynette. What do you suggest is a wise monthly gold or silver investment at $200 a month, coins or bars? I know that is not a lot, but it's what I can do presently. I am a housewife who basically is educating herself, listening to you in great part, and investing my monthly mad money. My husband does not agree with me, opposite political views on the S&P bandwagon, etc., etc., etc. Therefore, he will not give me extra funds to invest. I understand what you explain about the value of gold and silver and have accumulated a bit on my own, but I'm a bit panicked now, feeling it's the end game. And I want to ensure the purchases I make now are wise. Thank you for all you do." So what would you have to say to Diana?
Well, you know, it's a bit challenging because you really do need both. Keeping in mind, Diana, that gold and silver in any form is monetary at its base. I think that maybe you should accumulate just a little bit so that you can do a diversified portfolio, because you can do fractional gold coins like the old foreign gold coins. I don't even have any idea what they're going for now, but they're still fractional gold. So you can get that. That means it's under an ounce. Whenever you hear the term fractional, that's what you need to understand, that it's less than an ounce, because you still want that diversified portfolio.
Right. And you could get the fractional raw too, and like the ungraded coins. Right?
Yes, exactly. Okay. You know, so they can still be pre-33, but they're different sizes. Though I think as far as markups go, there's probably a bit less markup in the foreign gold coins that Kennedy gave. President Kennedy gave a similar kind of exemption to when they wanted to import a lot of gold.
Okay. Great.
But keep stacking, keep buying. Even if it is silver, you can maybe, depending upon how much silver you have, convert some of that into the fractional coins too. So you have a lot of options. I don't know how long you've been doing this, but I really am glad, and your husband is going to be glad at some point too. I did a video, a shareable video, not that long ago. I don't know if you could share this with him on the stock market going up and what's really happening, because that's just nominal, right? And as soon as you hear nominal, you need to know, well, something's being hidden.
Right.
That's not the real trend. The real trend is the value of the dollar, right? And as long as we have inflation, which is baked into the currency, then you're going to continue to see the value of the dollar decline until all confidence is lost. And I believe we're like this close to that.
Wow.
So she's right. There's too many things that are shifting. We are at endgame.
Wonderful. Well, if you want your question answered by Lynette, make sure to send your questions into questions@LynetteZang.com. And we would love to, we're discussing those. We're having a great time answering all of those. If there's something that we have missed, we definitely want you to point that out to us. The more questions we can answer, the better. And the more people we can help, the better.
And we're doing that on our podcast,
Exactly.
right? So the more questions we have, and plus today, this is going out Saturday. So on Tuesday, we started doing a live event and then taking questions after that. So we have some extra questions that we're also going to be asking and answering on the podcast.
Yeah. So make sure to tune into our YouTube channel as always. If you liked this video, give us a thumbs up. Make sure to share, subscribe to the channel, and
leave a comment.
Yes, leave a comment.
Right? Leave a comment, because that's what helps push this out. And, I'd like to see 2 to 3 million subs by the end of this year. Can we do it? I bet you we can.
Yeah.
If everybody helps, if our community around us, and I have honestly, I'm so proud to be part of this community. If our community all participates, I'm a little ambitious, but we got a shot.
Yeah.
Right? We got a shot.
Let's shoot for the stars. Let's do it.
Yeah, absolutely.
Yeah. Well, until next time, you guys, make sure, please, to stay safe out there, and we'll see you next time.
Bye-bye.